Today, we're cracking open the playbook of a corporate empire. We're going to go beyond the headlines and really break down the specific moves that took one company from a local scrapyard to an absolute global titan. And look, this isn't just a history lesson, it's a masterclass in strategic growth. Let's dive in. So, before we get into the how, you just have to appreciate the what. We're talking about one of the largest, most diversified natural resource companies on the entire planet. You just don't achieve this level of dominance in metals, mining, and energy by accident. No way. This is the end result of decades of calculated high-stakes decisions. And this right here is the big question for us today. How does a small-time scrap metal business from the 1970s become that? Was it just a stroke of luck? Nope. It was a deliberate, repeatable strategy, a playbook that we are going to break down move by move. All right, so here's our game plan. We're going to start at the beginning, that initial pivot from just dealing scrap to something much, much bigger. Then we'll unpack 4 key lessons from their journey: how they handled risk, their mastery of acquisitions, how they tapped into global money, and their strategy to totally dominate. And then we'll wrap it all up into a clear 5-point playbook. Okay, first up, the foundation. To really understand this giant, you have to go back to its roots. And for Vedanta, that's not some gleaming corporate tower. It's the gritty, high-volume world of scrap metal trading. Everything that came later was built right on top of the lessons they learned there. The most important thing to see in these early years is the pivot. Just look at the timeline. In the 70s, it's a simple trading business. But then, in the 80s, you see that first huge strategic shift. They go from just trading materials to actually manufacturing with them. They did that by buying a struggling cable company. And that success, that's what funded the next even bigger leap into the super high-stakes world of mining. This was not random. It was a step-by-step escalation of risk for bigger and bigger rewards. And that brings us right to the first core lesson of the playbook. None of this happens without a real appetite for calculated, visionary risk. It's all about seeing a huge opportunity where everyone else just sees a problem. What's so powerful about this quote is that it just cuts through all the usual excuses. It frames this whole massive enterprise not as a product of money or connections, but as a product of pure vision. That vision was the real asset, the thing that fueled all those early risky moves. So, with that vision locked in, they needed a tool for some serious explosive growth. And that tool was strategic acquisition. Vedanta didn't just grow slowly, it basically assembled its empire, piece by strategic piece. Now, let's be really clear what we mean by this. We're not talking about just randomly buying companies. Strategic acquisition is a discipline. It's about buying assets that either give you instant market share or they give you a foothold in a brand new high-growth area. It's chess, not checkers. And if you want a perfect example, look no further than the Sterlite Industries acquisition. This wasn't just another purchase, it was the catalyst. Why? Because it gave them a major operational base and, crucially, the credibility they needed to start playing on the global stage. This one move was the linchpin for their entire international expansion. And Sterlite? That was just the start. From that one foundation, they went on an aggressive buying spree across this entire portfolio. And notice the 2 ways they were growing here. They expanded vertically into all these different commodities, from aluminum to oil and gas, and they expanded horizontally, all across the globe. This wasn't just about diversifying. This was the systematic construction of a global empire, one asset at a time. But an aggressive acquisition strategy like that requires one thing above all else: capital, and lots of it. That leads us to the third, and you could argue the most critical lesson from the Vedanta playbook: unlocking access to global financial markets. This chart right here just perfectly illustrates the turning point. Before listing on the London Stock Exchange in 2003, check out the left column. Limited access to cash, only known at home, a pretty small investor base. The LSE listing was a strategic masterstroke. Now look at the right column. It opened the floodgates to international money, gave them global credibility, and attracted a whole new class of big-time investors. This move was the rocket fuel for their acquisition engine. Okay, so with global capital now in the bank, Vedanta executed its 4th major strategy. See, for them, diversification wasn't just about spreading risk to play it safe. For Vedanta, it was a strategy to achieve market dominance across multiple critical sectors. And honestly, the results of this strategy really speak for themselves. The goal wasn't just to own a bunch of different assets, it was to become a market leader in each one of them. As this chart shows, they achieved some serious global rankings across their portfolio, becoming a world leader in things like zinc. That is the huge difference between just diversifying and a strategy of diversifying to dominate. Of course, a playbook this aggressive doesn't go untested. I mean, when you grow that big, that fast, you inevitably attract intense scrutiny and a lot of challenges. Vedanta has faced some major headwinds, from environmental issues and legal battles to community protests. A truly great strategy has to be resilient.
And this is where you find a fifth, kind of implicit lesson. The company's response wasn't to stop, but to adapt. The philosophy was to treat every single challenge not as a roadblock, but as a data point, a learning opportunity, to make their operations and their strategy even better going forward. That adaptability is absolutely key.
So we've walked through the history and we've pulled out the key lessons. Now let's put it all together. Let's write out the complete Vedanta playbook for building a global giant. All right, here it is, the 5-point playbook. 1. Visionary risk. Have the courage to pivot out of your comfort zone and into more complex, higher reward sectors. 2. Acquire. Use strategic buys to scale up and enter new markets fast. 3. Global capital. Go tap into international financial markets to fund that crazy ambition. 4. Dominate. Build a portfolio not just for safety, but to become a market leader. And finally, number 5, resilience. Build a culture that learns from pressure and turns every challenge into an operational advantage. You know, the journey from a simple scrap metal yard to a global resources powerhouse is just a powerful testament to strategic execution. It really suggests that if you have the right playbook, the only real limit is the size of your ambition. And that leaves us with one final thought. In today's wild economy, which parts of this playbook are truly timeless, and which ones might need a rewrite for the empire builders of tomorrow?